as far as the margins go, in our business, there are two things that we must keep in mind. When we drive customer acquisition, that our revenue gets pushed into the future. By the way, we added 144 crores to the deferred revenue for the full year basis, which means we pulled out lesser and we put in more, which is by about 244 crores. So our deferred revenue is growing, which means our balance sheet is getting stronger, which means more income in the future, more profits in the future. But however, what it does is that when you are going after the member additions, you could see lower profits or lower margins because your cost is loaded up front, but the revenue gets pushed into the future. But the other area where we do see sometimes, and this I'm talking about the PBT margin level, not at the EBITDA margin level, where when we accelerate our inventory additions, you do see the depreciation and financing costs coming in.
You heard Mr. Kavinder Singh talking about the recognition of revenue. So what has happened? When a member has joined today, let's say today is 2023, he has joined today and he has paid you 25 years money in advance. So money for the next 24 years is kept with them and is being booked as and when the room is given to him. Right? But what is he concealing here? Here what the company is doing is, the company is not talking about the rooms which have been already allotted to non-members. They are earning money from the member also. They are earning money from the non-member also. And then the member waits for 1 year, 2 years, 3 years, and the third year, when he is not again able to get a room of his choice, he has to perforce, surrender his inventory. And in such an occasion, how they are booking the revenue when the services have not been given? This is $1 million question which even the NFRA has asked them, and they are not able to answer the NFRA. The NFRA has given them 4 months to correct their accounts, and let's see what kind of correction they are going to do in the financials. And another thing which I think most of our so-called mutual fund pundits and analysts have missed, the financials which have been projected are entirely faulty. They give a totally false picture about the financials of the company. The only income to the company is from the members. And if you are simply collecting money on account of maintenance and diverting it into your regular profits, you know what kind of financials they have presented. So this is as regards the deferred recognition of revenue.